Hello, everyone, and welcome to the Crypto Talks podcast. Today, I have a very special guest. I reached out to him on Twitter, and he said yes straight away. So I'm very happy to have you over. Jake Brukhman is in the house. I'm very happy to be talking to the co-founder of Coinfund, and I'm sure that he can take over in order to say what exactly he does, and we'll take it from there.
Cool. Thank you for having me. I appreciate the invitation. So Coinfund is one of the first crypto funds. We've been around the space since 2015, investing in cryptocurrencies and blockchain technologies. Our team also works as an advisory team to companies of various categories and stages and sizes who are exploring blockchain technology as a new form of business model, or as an efficiency technology for whatever their existing business is, and we help them to design these systems and structure them and make them kind of ready for the real world.
I mean, I'm always saying that I'm talking to early adopters of the blockchain and crypto, because I still believe even people who are getting into it right now are still early adopters. But you've been there way before that, so it's really interesting. How did you get into the field? Because back then it wasn't really such a big topic. It wasn't really the buzzword, and it wasn't a field everyone rushed into. So I want to know the story of, how did you get involved into that?
Yeah, sure. That's a great question. I am someone who has been in technology for a long time. My background is in mathematics and computer science, so I've been working in that field generally for many years. And in back around 2011, one of my very geeky technology friends sent me about half a Bitcoin, just as the system was starting to grow, and that's when I got kind of my first taste of cryptocurrencies. Even though I'm a pretty technical guy, it took me a long time to understand exactly what the system was, and I totally didn't get it. I think when I first got the coin, the half a Bitcoin, I thought it was very cool. But then I tried to mine some on my laptop, and my laptop kind of overheated, and
Uh,
and I didn't really understand like why I wasn't mining anything. And so I became aware of it around that time, and then around 2013, I had been hearing more and more sort of news and reading on Reddit about kind of how that ecosystem was developing, and it became. I decided to just buy some Bitcoin around mid 2013, and kind of the next thing that happened was the price skyrocketed to $1,200, and that's when I started to pay attention a lot more and kind of being involved in reading on a daily basis, and then which subsequently led to me being aware of the Ethereum project and the Ethereum white paper, and I remember reading the Ethereum white paper kind of at work, and having finished it, sort of putting down the paper and like looking at the wall for like 30 minutes and being like, this makes a lot of sense and this is very, very interesting. And so subsequently that led to a lot of research on cryptocurrencies that I did, and a lot of research into the projects that were developing around the space at that time in sort of early 2015. And that in turn led to Coinfund, which was basically my idea to create and diversify portfolios of digital assets. So Coinfund launched as a sort of proprietary investor in crypto assets July 1st, 2015, and has been going and growing ever since.
Okay, well, awesome. So it's interesting you said that, because many people I spoke with actually started their journey by having a crypto. I mean, once you have it and you figure out that it's there, and you keep asking questions like, what the hell is this? How does it work? What can I do with it? And it leads you down the rabbit hole of all these questions and research and reading stuff and learning things. So you mentioned that you read Ethereum at work, so the white paper. So do you still, before that, what were you doing exactly? What was your job?
So I spent about 5 years in basically like the hedge fund world. My first job. I was doing quantitative research and development on kind of traditional equity trading strategies and trading systems. I then got a job at a kind of a larger hedge fund in New York City, working on the financial technology side and sort of designing, maintaining, and scaling their global trading system. And then following that, I was a technical product manager and engineer at Amazon. Ran a team in ad tech here in New York. And then after that, I was a CTO of a fintech startup that did a lot of very interesting research on, basically private technology companies and how to, evaluate their business models and their financials.
Oh, that's really exciting and interesting. So and now you are with Coinfund full time. That is what you dedicate your most of the time.
Yeah, so I'm one of the co-founders of Coinfund. I went full time on it in I think about early 2016. So I've been at it for almost 2 years now. Wow, it's kind of crazy to think.
Oh yeah, it is. so let's think about this. You started relatively early. You basically read the things. You realized the potential. Back then, believing in this whole thing was quite hard in a way. That predicting the what's gonna come and how big this may get was quite difficult. So was it like did you believe in it, or was it a result of the analysis you did and the things you learned, or was it a gut feeling? Like, what was there to make you just get into it and believe it so much that to eventually get into it full time?
Yeah, that's a good question. I mean, like I said, I think like even though I was a fairly technical person, and it took me quite a while to understand exactly how Bitcoin worked. And I think the light bulb moment happened when just someone I knew at work, they put together sort of a little report or piece of research that described how Bitcoin works and the proof of work mechanism and what that actually sort of achieved. And I think when you get that aspect of it, you kind of realize, the computer science problem that has been solved by a network like Bitcoin. And then you start to think about, like, what does it mean to have a decentralized system? And what does it mean to have people sort of anonymously and trustlessly transacting with real money? And, it's not that hard to see, I think, the value of a system that creates a scarce digital asset. I mean, this is something that really is so new and it has not been possible before. And so when you fully get this picture of a decentralized network, you realize that this is actually a very, very interesting piece of technology that is basically completely new. And from there, your imagination starts to sort of flow, and you start to imagine what are all of the possible use cases of this technology. Mm-hmm. And like everything else, there's this competing these competing forces, because on the one hand, like any new technology develops very, very fast, right? Mm-hmm. And so you saw Bitcoin, and then you saw Litecoin, and then you saw Dogecoin, and then you saw all these like clones of different cryptocurrencies. Yeah. But then one thing comes along and kind of changes the game, and you move to a different level. It's almost like evolution, and suddenly like you were here and now you're here. And you could point to a number of milestones in the development of blockchain technology that have done that. And of course, smart contract platforms like Ethereum going out into production and actually being demonstrated was one of those jumps, and I think there is a lot of like other sort of smaller ones. I think we're going to see more jumps like that as people develop scalability solutions of various kinds for these platforms, as well as completely alternative technologies that might not even be blockchains, but that still implement decentralized value networks. And so that was kind of the process for me. I always thought that Bitcoin as a currency was a bit of a tall order, right? Because the way that a currency is very useful to people as a unit of a medium of exchange, right? Involves stability, which of course Bitcoin and every other pure volatile cryptocurrency don't really have that property. And so, then early on there was this feeling that, nobody's actually using this as a currency. A bunch of vendors tried to integrate Bitcoin, but nobody wanted to use it because nobody really knew about it. And everybody ended up holding Bitcoin as an investment. They still do today, and are not really using it as a currency. So to me, like, that use case was, it was very like highly speculative, and I could kind of see like, if everybody in the world started using Bitcoin, I could see how, maybe it would be more stable and more usable. But I think, again, what really lit up the light bulb for me was realizing that with the advent of something like a smart contract platform where you can build decentralized applications, now you really had these core use cases where you could significantly attempt to disrupt various kinds of things like, decentralized data storage, decentralized computation, every kind of marketplace that you can think of, social media. And that's when, I think, from the smart contract platform, that's really where it sort of flows out. And what you see in the market, right, is that every possible technology vertical is currently building on blockchain. You see everything from everything that I mentioned to ride sharing to Amazon competitors, and really, like, this space has people from every industry and every domain thinking about what does my field or application or business look like when it's built upon this technology. And that's because the technology is so general. So I think that's what I really attach to much more than just cryptocurrency, but I attach to the idea of being able to decentralize various kinds of businesses.
Well, now that you mentioned that, I've noticed that everyone is super excited and talks a lot about Bitcoin, but many don't realize that blockchain and the technology itself is what is crucial and important and applicable in many other spheres. So it's like, everyone is sort of getting the focus straight to the Bitcoin specifically, or in some cases crypto in general, but very few on individual level actually pay attention to and talk about the technology and blockchain in particular. So that is something that creates a little bit of confusion, because when we spoke, it sounds like maybe Bitcoin and crypto as a topic are more attractive to people, or just because there is this monetary value behind that, and they can see, how many dollars the exchange is. It's easier to evaluate that. Probably that's the reason. But these days, like, much less people talk about blockchain than Bitcoin and crypto in general. At least that was my impression.
Yeah, I agree with that, and I think that's because people who are, coming into the space and just starting to learn about it, as humans do, they try to rely on analogies to understand kind of new concepts, and that applies to regular people, but it also, in the same way, it applies to, the famous economists that have looked at this space, or governments, and so on and so forth. And I think, like, in this space, like in the space of digital assets, I would say, analogies are good, but they only go so far. For example, people write articles in the newspapers, and they're like, we don't understand. Ethereum just, went up 100%, and it's kind of like a stock, but stocks don't go up 100%. So how is this making any sense? And the answer is, well, it's because there's a certain level of analogy, like when you're looking at the price graph of Ethereum and it looks like a stock, but the structure of how Ethereum works is very, very, very different than a stock. And the reason for its existence is very, very different than a stock. And the systematic factors that go into its network are very different than a stock. And then you realize that, well, it's not just Ethereum. When you create a digital asset, you have this exceptionally general thing. You can write a computer program that defines how this asset behaves. And so the analogy to these traditional financial instruments like gold and currency and stock and bond and whatever else you can think of, very quickly breaks down. And then you realize that you have to evaluate every one of these digital assets on a kind of facts and circumstances basis and really understand what they're trying to do. What are their properties? How are they issued? Do new ones appear and disappear? Can you create new ones? Can you burn old ones? What is the method by which they are priced, which is a huge topic today in blockchain? It's like, how do you create fair valuations for these things? And it's really what we're coming to is that this is just a new asset class, and it needs to be researched and understood, and that's what we're in the process of doing.
Okay, yeah, I see. So we spoke about non-techie people getting into the field because it's a hot topic. It's something very attractive. So we have fear of missing out. Everyone thinks that, oh my God, we missed the first stage. Now we definitely need to buy Bitcoin and get into crypto because that's a thing that is going to grow, etc., etc. So I just want to know, what is your view about, is there any specific personality type that would do better in the crypto space, apart from the fact that obviously they have to be comfortable with risks? That is one thing that I see in common in everyone who is in the field and feels okay with that. Anything else that is a characteristic that is something that would be favorable for people who are thinking about getting into crypto?
That's a wonderful question, and I think I have some answer for you. Certainly, let's take a moment to talk about risk appetite, right? So these technologies are brand new. They are extremely experimental. Many of them are not formally proven, right? So when you are buying into assets that give you exposure to these systems, you're taking on very, very significant risks, and risks that people tend to underestimate. What I have found is that there's two kinds of investors on each side of the spectrum. There's the really risk-averse investor who cares very much about the volatility of their exposure, and then there's people with immense risk appetites. And what you see in blockchain kind of over the last couple of years is that people who are risk tolerant tend to do better. They really do. And that's because they can stomach high volatility, and this is a high growth space and everything seems to be going up. And of course there are moments when the market crashes, or Bitcoin crashes, or Ether crashes, or everyone starts selling the long tail of assets. And these are very difficult emotional times that you have to be able to live through. Not everyone can do that. But people who can be risk tolerant, I think, have performed much better than people who have been conservative. Even though the people who have been conservative very likely did better in other markets. Right?
I see.
Right. So that's what I think about the risk side. But you asked, like, what is a good property, what is a good mentality or approach to have as you're looking at the space? Well, this is a very special space in the sense that you have many people who are holding cryptocurrency and crypto assets. And those assets are valuable. And that value incentivizes those people to support sort of the projects or initiatives or currencies or assets that they are holding.
Mm-hmm.
And what this is actually a bias that people experience that
Yeah.
doesn't that often doesn't allow them to think on a very rational, logical, um, and straightforward manner. And so, what I think is a really good thing to keep in mind for people coming into the space is, your inclination is to come in and learn as much as you can. And where you do that is on social media, on Twitter, on Reddit, on Medium in a big way. You follow the veterans of the space who have been doing this for a long time. But what you always have to do is you always have to adjust for their biases. You first of all have to be aware of the fact that those biases are there, and second of all, you have to adjust for removing those biases, like as you're processing their information. And the prototypical example of that, right, is that sort of the earlier holders of Bitcoin have made substantial gains in their Bitcoin positions and tend to be extremely aligned with the idea that Bitcoin is going to win. It's going
Yeah.
to be the only cryptocurrency or the major cryptocurrency, and it's sort of pointless to hold everything else because you're going to make the most returns, just holding Bitcoin. But what I say to that is, first of all, not only should you invest in things that make returns, but you also have to understand the risks, right? So it's not that you're just looking at the returns. You want to be looking at risk-adjusted returns. And second of all, you don't want to live in a world where the only technology is a single technology. You want to live in a world where the technology is constantly improving, people are constantly experimenting with new things, and are constantly building technology that in the end will be better. And that is fundamentally at odds with sort of like that early bias of Bitcoin maximalists has
Yeah,
been.
so basically they got emotionally attached to the asset that does best for them.
Is it emotionally attached, or is it
I mean, I
is
don't
it
know. I mean,
monetarily attached? It's a little bit of both, I
well,
guess, right?
probably one, brings in the other, or
Yeah.
So,
So so people who have these kinds of incentives, what they tend to do is they tend to discount the risks of holding a particular asset and to overvalue the holding of that asset. And this applies to Ethereum just as it applies to Bitcoin. I think investors, on average, severely underestimate the risks of holding large positions in Ethereum. They severely underestimate the risks of that platform failing to scale long term, or another platform coming along and presenting a better technology or a more scalable technology or a more secure technology or a more formally verified technology. That will actually steal some of Ethereum's market share. So Ethereum investors are feeling really good because Ethereum kind of came onto the scene and stole much of the market
mhm.
share, together with its kind
Yeah.
of tokens that are built, that Bitcoin initially had. But in just the same way, other technologies are kind of come along and take some of Ethereum's market share as well.
Yeah.
So you have to be aware of that.
Yeah, I think you should have a more open mind and look at things less, because I think the problem is that the excitement is so big and people talking about this in a very supreme ways are so many that many people, because of this whole thing, don't really realize. I mean, because no one talks about risk so much, very few will actually come along and say, you know what, in reality, no one knows what will happen later on, like in a week or two or in a month, with the exchange rate of Bitcoin or Ethereum. No one really knows for sure. Usually, people go ahead and tell their predictions, but in such confident way that no one realizes that it's unpredictable in general. So they should take their own risks in deciding who to listen to. And that's another question. People who are getting into this field get overwhelmed because there's loads of places to go and follow people, loads of places to go and read stuff. Most of the good stuff is pretty techy and you know, relatively difficult for non-techie people to get into, especially if they are starting. And there are many, many people who now are pivoting, and because it's a big topic, are trying to brand themselves and as crypto experts, although they're just getting into it. So for someone who wants to learn, what are the credible sources? How should they identify who to follow? Like you said, Twitter. There are loads of people on Twitter from the field. How one chooses who is a credible source, who knows his stuff, from whom to learn. I know it's a hard question.
That's a very hard question, and I don't think I'm even qualified to completely answer that, because my day-to-day experience is going through that process of exactly that, understanding who is writing credible information. This is as an investor in this space, as someone who kind of as a job does due diligence on these projects, and also on the people who are investing in the projects, founding the projects, writing about the projects, creating analyses. Like, it's my job every day to make that judgment call on like what piece of research is good, what piece of research is not good. And I've seen situations where you have a very traditional, extremely successful, extremely intelligent, let's say, analyst from traditional finance with a track record, and come into the space and give completely incorrect analyses of what's at least in my opinion, right? And then at the same time, you have 22-year-old kids in Australia who understand certain aspects of blockchain a lot better than some of these like professional analysts. And so without like going through a list of names, I would just say, you want to kind of choose a level of detail that is appropriate for you. I would say that technologically minded people are in actually a better position even than, a lot of investors, in terms of being able to evaluate the feasibility of some of these projects, the scalability of some of these projects. Like, the technology aspects of these things are the key kind of criteria to understand at the structural level. And what I think you need to do is you need to choose sort of a level of technical detail that you're comfortable with, and just read a bunch of stuff at that level on Medium, kind of follow along, and always be reading it in a critical way, in a way where you're trying to fact check, like, in my mind, does this make sense? Like, would that really happen if all of the miners did this or did that? And actually in this space, there's a huge incentive for people to come in and sort of, like you said, brand themselves as experts. Yeah. And they usually do that in the form of marketing. There's a lot of there's more blockchain conferences than there are projects, maybe.
Actually,
I mean, I'm
many people who get into this field as experts are marketers. I mean, I've seen many marketers rebranding into because they know how to market themselves, right? So
exactly. And when you have a nascent space and there's sort of like a vacuum of expertise, what happens is that the sort of the loudest people who tell the most beautiful stories, become regarded as the experts. They become followed. They aggregate network effects. And those are actually precisely the people to watch out for, and to fact check the most. So I think there's there's a lot of great people in the space working on things like evaluation of the technologies, pricing models for crypto assets, thinking about how investments should be structured in the space, thinking about how crypto funds should work. Tons of legal people who are working both in a lobbying capacity, in a nonprofit capacity, in a commercial capacity, to try to understand, what are the regulatory frameworks, what are the regulatory concerns around these assets, and I think you just need to read a lot, and you kind of get a feel with experience for what makes sense. You see things actually play out. You see who has made calls on pricing, right?
Yeah.
Which worked out and didn't work out. And then you kind of get an intuition about where you fit into that picture.
Yeah, yeah, I see. Well, we have this, I think, wrong stereotype that people in blockchain and people in crypto are people who are very techy, very nerdy, and sort of very specific and difficult to get along with, especially if you're from completely different field, which I found out was the wrong impression. And I think it's the wrong. I mean, you are the proof of this because I found out that you were quite creative person at the same time. I saw that you were writing poetry, you were making arts. So how do these two sides of the personality balance together, and how much space does this blockchain sphere need creativity injection?
Yeah, well, I mean, for me personally, I would say I have a kind of dual brain syndrome where half of my brain is like very, very technical and mathematical and computer science oriented, and the other half of my brain is very kind of into artistic endeavors. I'm lucky in the sense that I don't have to do artistic endeavors as a full-time job, and I have the luxury of having that as a hobby. And I've been in, throughout my life I've done things like play guitar and record music and paint and write poetry, and I've really and photography as well. And I've cycled through various creative endeavors as a way of like resting the other side of my brain. Now, when you that's a great question. Like, how does this apply to the field? Well, I would say that this is a field that really requires a lot of multidisciplinary skills. Certainly tech, certainly finance. Like, this is a financial technology, so you need both of those things. But there are areas where things like psychology play a big role. Things like behavioral psychology, organizational psychology. There are themes inside of blockchain, like governance, for example, which you could look at as a technical discipline for like people who theoretically study governance, but is also very much a political discipline, right?
Yeah.
Having digital communities is hard. Having digital communities that align, around a single project and make it come to fruition is even harder than that. And so I think there is space here in blockchain for many, many different kinds of people that range from highly technical to highly creative and sort of everything in between.
Yeah, I see. So there have been, I mean, apparently from the time you just started until now, there has been, as you said, the space is moving extremely fast. There are loads of changes. What are the main changes that you have discovered from back then until now? What are the biggest things that have changed since then?
I mean, where to even begin? Everything sort of, roughly speaking, I think every 3 to 6 months looks very, very different. Sometimes there are events that are social events that kind of change everybody's thinking. Sometimes it's technological events that sort of change the market. Sometimes there are regulatory events. Sometimes there are kind of events of the greater economy adopting pieces of blockchain that are seen as very, very bullish. To be a little bit more concrete, one event I can point to is, like, for example, the event of the DAO last year and the subsequent Ethereum fork, was an event that, first of all, we kind of underestimate, because what happened was that a digital company on a blockchain raised the largest crowdfunding that had ever happened in the world.
Yeah.
And this was almost like a milestone in the humanity's like technological development, if you ask me. And the subsequent thing that happened is that it exploded spectacularly because this technology is not ready and I think is very nascent, and it really also set everybody's mind toward the idea that governance is a central and core issue in this space when you're dealing with public, open, anonymous, pseudonymous, decentralized networks. And so prior to the DAO, you had just a few people, you could probably count them on one hand, who have thought about blockchain governance and were seriously working on it. And after the DAO, there are tons of projects that you can point to that variously explore governance as a protocol level feature of blockchain networks or as a product. I'm an advisor to the Aragon project, for example, which is dedicated to decentralized governance. You have things like Democracy Earth, you have things like Tezos and Definity that have governance systems, and many, many other things that will come down the line. So I think governance is a huge trend. On the investment side, what you see is that we have actually this year have raised more money through decentralized crowdfunding that we have raised in traditional VC format, where VCs invest in the private equity of companies, and that's amazing. That's a world changing, I think, trend, and it points to this space as an innovative technology that can assist in capital distribution, capital allocation, in efficiency, in all kinds of use cases as it pertains to investment. And then technologically, you have tons of trends, right? I think 2018 is going to be a huge year where many different projects will explore how do we actually get this technology to internet scale, into the hands of companies that have millions of users. And if the project of the moment is Crypto Kitties, right?
Oh yeah, exactly.
And what you see here is a great user experience, an amazing consumer proximate and almost consumer palatable blockchain technology, and you see astronomic growth in the course of about a week. CryptoKitties has aggregated, at least it's much more now, but yesterday it was 27,000 users and $3.8 million transacted on the platform.
It worries me a little bit, although, I'm really worried about the mankind who are so excited about, it's a little bit controversial for me, to be honest, because I've been seeing tweets from 40-year-old man being really excited about CryptoKitties, and I don't really, I have mixed feelings about that specifically, to be honest. It's a bit controversial.
Let's definitely explore that. But to finish my thought, I think CryptoKitties, right, is an example of an app which is likely to test some of the scalability limits of the Ethereum network. And, you actually see the team kind of raising prices to curb the activity. CryptoKitties was taking up as much as 25% of all Ethereum transactions over the weekend.
Wow.
And this shows you some of the limitations and the technological boundaries that we need to improve upon if this technology is going to go mainstream. But let's go back to CryptoKitties as a product. You said that you were a bit concerned. So tell me like how do you view, like, what is your opinion on CryptoKitties? Like, have you used the product?
Well, no, I haven't. Actually, I discovered this, I think yesterday. I heard about that, so I did a little bit of reading. I saw some of the kitties. I saw some of the people who have bought kitties and are super excited about that, who are waiting for kitty babies and all that stuff. So it's to be honest, I mean, I don't really have deep knowledge about this yet, so I can't. I mean, my opinion is a bit based on the surface impression of the hype and of what is out there. I think it's a little. What I'm concerned about is that these days, and it's not only about the kitties or about AI and the tech, like being too attached to tech on daily basis and having it as part of your lifestyle in general. I think my concern is that we may end up getting to the point when we will be feeling more comfortable with tech than with people. So that is why, even this podcast is more about, the human aspect and talking to the people and the humans of blockchain rather than, focusing on the technology. Because I think by focusing and going too deep in technology, even, this interaction with, eventually you're dedicating more time on, interacting with kitties and getting into the digital and crypto platform of interaction and communication rather than having a face-to-face conversation. That aspect worries me a little bit because if it goes really mainstream and if it becomes the second big thing out there that everyone will be really spending too much time on it, I'm not so sure whether it's whether it's good or bad. It's good from the technology part of it, with the experiments, with how much it can be done, what how ready the public is to actually come along and use it without realizing that they're using a quite complex tech, right? Because I think the possibility of going this mainstream is when people use the stuff without going too deep and realizing what they are actually using. So that with the kitties, that is what's happening. Obviously, these 27,000 people are not people into blockchain and don't really know how things work and how this whole thing is happening, right? But they enjoy the experience, they go into it, and I guess that is the main benefit. But from the human aspect, I'm not so sure.
Yeah, and that's I think that's a great way of describing it, and it's a valid concern. And I think a lot of people think along those lines too. I happen to think that, if you really zoom out and look at sort of the relationship between technology and humanity, many things about it on that sort of macro level are kind of inevitable. And it's almost like economic trends that make technology develop in the way, not so much that humans want it to develop, but in a way that it naturally develops on its own. And actually, Kevin Kelly, right, who was the editor of Wired, he has like a book, I forget what it's called, but it explores this idea of like, what does technology want? Where is this going? And he kind of describes technology as an evolutionary step. It's sort of, you go from like biological evolution into technological evolution, but anyway, that's a subject of a whole separate podcast.
It's a point of no return, basically. Once you are there already, you can't really go back. So it's senseless to think about it. But it's just a matter of how, to what extent you will be moving forward in that direction. So basically, that is what
you can make a personal choice about how much you want to participate in, in that trend. But I definitely see our society is getting more and more and more technological, and it is. As people who were born, I suspect you and I were both born at a time when computers weren't mainstream, right? And so
actually, when I was born, there were no computers, and it was back in the Soviet Union, so it was quite a while ago.
I was actually born in the Soviet Union as well.
Oh, really?
I don't know
Where?
Yeah, I was born in St. Petersburg, Russia.
Oh, okay. I'm from Armenia originally.
Yeah.
So.
Well, in any case, so when we were born, computers weren't like a thing in the home. Commonly, we didn't have cell phones or anything like that, and so, I think it's quite a different experience for people being born into our present.
Yeah. I mean, when I compare my childhood and my son's childhood, it's a completely different experience and related to tech as well. So, did you get a kitty, a crypto kitty?
It's my job to research non-fungible transferable digital assets. So I definitely have got some kitties.
Okay. Yeah. Nice experience. Interesting.
Well, I think it's a very interesting user experience. It's likely to convert many new people to the platform. I know that sort of some of my friends who are not as much into blockchain as I am, they've definitely heard about it. and are kind of exploring it.
Mm.
So I think that's a good thing for the blockchain space, and it will come with a bunch of challenges of scaling that up. But what you see as a product, it's experiencing incredible sort of
Yeah.
growth and adoption right now in the first week.
Yeah.
And that's, I think, a demonstration of the power of these underlying technologies.
Yeah, absolutely. What about? I mean, you mentioned new projects, you mentioned investment, and ICOs versus VCs, and how much they have raised recently. What is your? I mean, there are so many controversial views about ICOs in general, and their reputation is getting a bit damaged because everything that is happening, and people are becoming more and more skeptical about the new ICOs emerging these days. What are your views on that, and how you are picking up the ICOs that are worth investing in?
Yeah, so this year Coinfund has been, as an advisory team, we've worked with a couple of pretty high profile projects. We have four main projects that we've advised or are advising this year. The first one was Kick, the Kin project, which is now completed. In the sense that they went out for a raise. They were they were in fact the first consumer technology company to come into the blockchain space and to do a fundraise that way. We're very excited to most actively at this time be working with YouNow and the Props project. They're going to be the third company on CoinList after Filecoin and Blockstack. And they have built some great technology over the last couple of years that they're going to be, enabling with a digital economy. So very excited to see that. I think we generally, and then we have a couple of other projects that are earlier stage, right? We have work with SweetBridge, which deals with global supply chain and kind of getting liquidity to liquid assets and stable currency. And then we have another project called Civil, which recently became a spoke of Consensus. And it deals with sort of decentralized platforms and technology for journalism, not just any journalism, but professional journalism.
Which one is that?
It's called Civil. Joincivil.com. And so, at Coinfund, we, when we take on advisory projects, I feel like we filter really, really hard. We have a big thesis around these technologies kind of spilling out into the greater tech market. So what we see more and more of is larger, more well-known companies kind of doing research on whether this technology makes sense in their context. Some of them want to build new business models around blockchain tokens. And it's actually not always the case that a company wants to do an ICO, right? I think that's been a very large use case of tokens, but there are also many efficiency use cases for blockchain. You see applications such as decentralized marketplaces, which just work on Ether and they don't require tokens. And Crypto Kitties is an example of one of those. And what we see is like the quality of entrepreneurs also is going up kind of behind the scenes. Like some of the more experienced entrepreneurs in America and elsewhere in the world who have had previous companies, who have had previous successes, are kind of actively exploring the space. And I think they bring a level of quality to these projects that, we'll see probably in 2018 that is much higher than what we've seen this year. And also the regulators, right? The regulators have been very actively watching and operating in the space. And I think that brings the quality level higher because it brings the cost to ICO up. You now need, you shouldn't really do an offering of tokens without doing a lot of due diligence and understanding and hopefully having a product where those tokens are used. If you're not in the securities regime, and things like that. So I think overall we'll see sort of a smaller market of ICOs, a higher quality market of ICOs, a costlier and more centralized market of ICOs next year. But I think I look forward to seeing all the new projects that are going to come out, and I don't think that this is a space that's really going to go away anytime soon.
Yeah, I see. So to wrap it up, I mean, everyone is making different speculations and everyone has different opinions about what's going to happen in the future with the technology in general, where the blockchain is going towards, and what's going to happen. So, what are your views? What are your predictions for this?
Well, I think I don't know, which is why I run a fund which diversifies across many different like dimensions of whether this is going to be a consumer facing technology or an infrastructural technology, whether this is a technology that was invented in 2009 versus 2017, whether this is a technology in consumer tech versus B2B or something like that. So I think it could very well happen any way. It might be that some bank very publicly, adopts cryptocurrency or builds their own, or some government does that. Or it might happen that some app like Crypto Kitties goes viral, and consumers are the first people to make it to that market. So how can you really predict how that will go down? And so I think the responsible approach of any investor is to pick extremely good projects, to pick extremely good teams, understand whether the technology makes sense and fits into the trend, whether companies are using the technology in a way that is that makes sense for them and is likely to get adoption, and then to kind of diversify across those things and see what happens.
Yeah, and don't just concentrate and hold Bitcoin only, basically. Diversify.
That could be a strategy, but what you will find if you take one of those strategies is that your risk-adjusted returns at the end of the day will not be as good.
Yeah, absolutely. Well, I mean, thank you very much for the interview. I really enjoyed talking to you, and I learned a bunch. So it was really nice. I hope the listeners got a lot of value as well. And thanks for your time.
Cool. Thank you, Ani, and thank you for having me on the program. I really appreciate it.